This is Brett for the weekly M3 trader class, and many people are still logging in, so we're going to dive right into it, and we're going to cover Bitcoin. We're going to cover all kinds of things, the IBIT, some news, and what's going on, the USDT dominance, Tether, what's going on there, where's the money flowing, and what should we do next. You probably saw that I sent out an alert late last night. Sorry, sometimes that's when it starts to break down, and I happened to be watching and issued a sell all crypto alert. At this point, it's a little tricky to know what to do because we are sort of at support, but it just doesn't look like there's any reason to bounce, and I don't want to see this go lower. So with that, we'll go ahead and dive in, and I'll pull up chat here a little bit later so we can kind of dive into it. So I want to start with the Gaussian channel here and revisit this, and we'll kind of go macro and then into the current state of things. But as I suggested back here, so we were right on this, that the Gaussian channel, the 5-day Gaussian channel, every time in the past that a cycle has turned red and price has gone down below it, minus the COVID crash, but we saw either a 60% or a 50% pullback before the bottom, the last one being 60%. So, because we didn't go so parabolic on the upside, I think it's reasonable to assume maybe we only go down 50%, and that would be around the 46,000 range. We do see some buyers around the $50,000 range on the buy blocks. So if we draw a line there, we can kind of see that too. But, it really depends on price action, and I don't want to get into the weeds with that. But if anyone, many people have way too many charts and lines and technical analysis, and it's just a way to lose money faster. And, I've been polishing up on my, trade price action, skills, reminders and skills. I don't want to over rely too much on the indicators, although ours are very good, especially those buy blocks. But at any rate, Gaussian channel, again, from this breakdown, if we were to propose a 50% drop, puts us down around 46,000. We have to be open to that happening. And, regardless of the news and all the good news, show me the charts. Show me the charts, I'll tell you the news. And every time I've kind of gotten excited about, the Raoul Pauls and the banana zones and all of these other things, and, with the caveat of the Clarity Act and market structure bill, but I don't think that means suddenly we see a huge surge necessarily. Again, going back to what does that mean? That means the big houses like JP Morgan, etc., and I've mentioned this before, they still then have to get on the phone with the registered investment advisors and say, all right, we have regulatory clarity, start calling your clients. So they all get on the phone and say, hey, Bob, Mary, we recommend 3 to 5% in Bitcoin. And, they like to stay in business because apparently customers are good for business, right? So they would like to see prices lower before they get their clients in rather than get all their clients in at the top. And we'll look at the outflows on the IBIT. Certainly the IBIT's been selling off quite a lot last couple of weeks. So for good reason. They don't want to have, a lot of money flowed in, and now there's money flowing out. So we need that regulatory clarity before anything can happen. And, to say that we need to get a bounce here, any bounce here I think would be met with resistance up in the $75K, $80,000 level, and then another rollover deeper. And that's my thesis. So we'll continue with that and kind of go through this. I wanted to pull up the monthly chart. A lot of this is review. We've covered this before. And, this also suggests that we have 13 months of a bear market starting back here in October based on the last 3 cycles. This is an original study here, so it's usually 13 to 14 months. And even if we see an accelerated one, then, we still want to be mindful of it could go lower and also be looking for the bullish early reversal indicator here. You see the green arrow? I've overlaid that, which is only fired 4 times on the chart of Bitcoin, the monthly chart of Bitcoin. Now, we didn't have it then. We discovered it. I discovered this pattern and we refined it over the last bear market. But noticing that it fired every time before, let's just go back to 2012 at pretty close to the bottom. And then we had here in 2015, pretty much at the bottom minus the wicks below, and also holding at that 21 week or the 21 month rather SMA. simple moving average, the 50 period, 50 month simple moving average, and then I have also in the green the exponential moving average. So is one better than the other? They're not really. I like both of them, and I won't get in there. So there's also the bull market support band, but this is for the monthly chart. At any rate, what I'm going to be looking for and really preserving capital, because I mean, as much as I've tried to get us into swing bounces, these markets have been treacherous. Privacy coins, that was going great until it wasn't. And we have to keep in mind that if Bitcoin is dropping, everything is dropping. And we just, we can't. I'm not going to be, I just want to say this, I'm not going to be picking bounces as casually now. We likely are headed lower. And, you know, if we are to do any swing trades, they're going to be a couple days, and we have to take profits in the red boxes. I think at this point, you know, I'm ready to flip bearish-ish, but we have to be careful. Back to the example, because if we come back down, as we have seen every time, and we're here right now, we are like 4 months in of a potential 13-month bear cycle, but it's also right at holding at the 50-month exponential moving average. So could we get a little bit of a bounce here? You know, we could. It's really very rare to see 5 red months in a row. And, you know, I almost want it to come back lower, though, so that we can bounce strongly into March, potentially. Because if we get 5 red months in a row, that's even more unusual, okay? So we've only seen this on a monthly time frame once before, and that was back in 2011, followed by a rip-roaring rally, and this was the shorter version of it. So from here, from the all-time high, it was 1, 2, 3, 4, 5 months versus the 13 months to the bear market bottom. And so I want to make sure everyone's on the same page here. You know, I don't want to say we can't go wrong, but I'm going to say that our best odds of making money back is being patient, mostly being out of this market at this point, waiting for, you know, if we get a 5th red candle, looking for specifically a bullish engulfing candle on the monthly, followed by or concurrently with our early reversal indicator. And listen, if you're saying to yourself, this isn't what I signed on for, this active trading isn't for me, I hear you. It's gotten really difficult. And if nothing else, if you take nothing else away from this class and these classes, is you could trade on the monthly time frame and look for the bullish engulfing candle and the bullish ERI, and preferably with a money flow block like we saw here, because these tend to hold price. That's part of our ERI Pro. So, and that's our custom indicator. If you're watching this replay somewhere, you can find more at cryptomastery.org. M3 traders, you know where that is. So anyway, long story short, you guys have seen this chart from all-time high to all-time high, 49 bars, 47 bars last time, and then this time again 47 bars. So we're seeing maybe a slight shortening of the cycles. And, you know, we could also make the argument, if we wanted to look at it, and this doesn't mean it's the tradable advice, but it's meaningful and possibly actionable. If we look at these, if we take out the green recovery months, we have 1, 2, 3, 4, 5, 6 bearish monthly candles before we sort of saw some kind of a relief. I guess I'm sort of wondering, if we take out the up months and just count the down months, 1, 2, 3, 4, 5, 6, you know, we still have 8, 9, or 10 down months. Okay, so that theory's out the window. My point is, if we just head straight down and get it over with, maybe we can get through it faster. That'll be interesting to see how that plays out. But based on this, the bear market low should be around September of 2026. Now, we have midterm elections. We have a lot of variables in here. And I would suggest that we should get some kind of a bounce off of where these two moving averages, the 50-month simple moving average and the 50-month exponential moving average. So together, they provide pretty good support. And the lower one, being blue, kind of the ultimate support, even though we broke through it last cycle, but this was FTX right in there. And what's interesting is we're already at deeper fear than FTX. So the other side of this is we are at historic low fear on fear and greed. So we'll get some kind of a bounce, but does that mean we want to risk taking that bounce? And I would say I don't think I'm going to do it unless it's just a very clear on our other signals. We got a little bit ahead of ourselves trying to catch that weekly reversal. It didn't happen. The TSIs were pushing up toward that 20 line, and I'm going to show you that, but it's a great lesson why not to get in early. That's why we like it confirmed closes above there. Now this is all armchair quarterbacking. I'm just going to say that. And so if I sound like I'm suggesting this was easy, it has not been easy. It's been very difficult. But we have learned a couple things, and I want to pull back here. We'll come back to the tether dominance. This is something we nailed. My study here has been closely projecting this and showing that we are in a bear market. And this could certainly get worse. Money flowing into stable coins, money flowing out of crypto and Bitcoin, and I think it probably will. That's why I sold everything last night, and I hated to do it because down quite a lot. You know, elephant in the room. I think we're all down quite a lot. Those of you that got into cash earlier, right up higher around Bitcoin 100,000 or so, and I know there's some of you in private clients, and I know one of you that was going out of town for a month long, being away from the computer and asking me, should I buy some just in case it rallies? And my spidey sense was, look, I wouldn't. I would stay in cash. And I'm glad that I told her that. And because she did that and avoided all of this. It's watching it day to day and me wanting to provide value for you because, look, these classes aren't free. I understand that. Your time isn't free. So in the effort to provide value, I've been looking for where's the needle in the haystack? Where's the opportunity to bounce to make some losses back? And, you know, that we'll talk about Zen and privacy coins in a minute. But some of the worst, let's see, the trade setups were there. The outcomes were terrible. So that's where I'm just like, I'm going to get out. I'm out of the market. Now, on the monthly time frame, a couple things interesting, too. I was looking at this morning. Now, I had proposed we might be seeing a head and shoulders, and the fact that we have not gone into a right shoulder is actually a good thing, and here's why. If we were to pop up and done a right shoulder, making this the neckline, and we lost this, then the measured move would put us down around 44,000. And we really don't want to go that low. Some people are waiting and wanting to go down to 30,000 and 40,000 and buy back, but I would submit to you that we would like, if we want to get back in and have this be a super cycle, we'd want to see this macro trend line going all the way back to May of 2017. Held here in February of 19. The COVID crash, it dipped below, but that was a black swan, and it held here, created a kind of a new different trend line support. But it held here in the last cycle, December 2022. And then, so the fact that we're holding this is good. And therefore, the head and shoulders is not in play currently. We could certainly hold and rally off of this. Now, if we were to wick down to that $50,000 level right in here, you know, and we could draw another, there's some support. Now, this, you know, support, I also want to remind everybody that trend lines are great, but really there are support zones. It's not always the exact area, and there's multiple levels. So there's a support zone in here right around 52,000. And what I don't want to see is it break down below there, because then we have sort of this less steep trend line support. And if it is that, it is that. But then we'd really want to see it hold at 45K, and it would just mean it would take longer to new all-time highs. Now, I'm going to come back to this, because I neglected to point out this chart here, again, on what we'd be looking for. This chart here is in the next time, back to that, if you only want to trade the monthly time frames, back here, when I saw this, remember in 2023, I had relaunched M3 Trader in December of 2022. Blood in the streets, we were down around 16,500. Everyone thought I was crazy. I was saying it's time to buy. And I wasn't 100% sure, but I felt this is the time to buy. But in January of 23, I was pounding the table to get in, just as I was pounding the table to get out back in January of 2022. But because, and the point is here, what we want to look for is this specific pattern. A monthly bullish engulfing candle and an ERI. That's when I'll go all in, and I'll go in with leverage. Because, not a huge amount, because there still can be whipsaws, but because every time before We saw that bullish ERI, higher, bullish ERI, higher. There was a couple bullish engulfing candles. There was one right there and one right here. I'll zoom in so you can see that. So the combination of those two, the bullish engulfing candle and the ERI, and then here, I'm going to layer in, I'm going to add the camel cycle indicator. Not everyone has that, and it doesn't mean you have to have it, but I'm going to pull it up anyway. And on the, where is it? There's a trend line indicator. I haven't really used that much. The cycle trader, I don't know that it works well on the monthly, but I'm looking for more confluence. And this doesn't really show on the monthly time frame. It didn't load for me, actually. Trend line indicator, cycle trading indicator. Something's going on here. It's not working. Okay, it is. It took a minute. So interestingly, that the camel cycle indicator has been calling it a little early on the in the scheme of things with the ERI. But isn't that interesting? I haven't looked at that. We're looking for clues, are we not? And so it's interesting to me also that the ERI, which called the bottoms, the camel cycle indicator called it 2 months early here and 2 months early here. And the data going back before that, I guess, is less relevant. So now this is not optimized. It's not optimized for monthly. But let's turn it off. Let's take a look at the weekly. I wanted to set that up for, if nothing else, if that's all you did, you're doing very well. All right, what I want to get to here is this monthly chart again, because a couple other things to look at. We're going to go macro and then micro today. So monthly chart on the RSI. We've come down to a key level here on the RSI, down to 43. And it bounced sharply off of that in 2019, so we could get a bounce here. But last cycle, it did not bounce. It came all the way down to this level at 40, so this is a range to watch. And then I have on my notes to check the daily and weekly reversal levels. So let's look at weekly. And on the weekly, though, we do see we're heading down. So I set an alert this morning. And maybe what I'll do is I'll raise that a little bit to 26. Because these are potential bounce areas. And, we'll have to watch that more closely. But I'm going to be very careful on suggesting that we get in. I want to wait for a confirmed bounce. And then if I go to a daily RSI, the daily RSI has been the lowest it's ever been recently. It's strange that it didn't reflect on the weekly. All right, I'm sorry. So not as ever been. It's been lower. The RSI in November of 18 hit under $10. Yeah, so we could see another push down on that, and that's what I think probably is going to happen. $10 would take it all the way down here. $20, $25 right around there on the low for the weekly bottom. So anyway. All right, that's all I wanted to cover on that. Let's go back to the monthly here. Looking at money flow. Money flow is still leaving the markets. Broke a key support level, heading lower still. Another reason. There's not, money is protecting the musical chairs. The music has stopped. Everyone's running for their chairs or they're getting out of the game. The one that's interesting here is the stochastics RSI, and this is a chart we've seen before. Now this is bottomed largely on the monthly time frame. Does that mean we have to go higher here? We don't, because I have here to check the 2-month time frame. So if I zoom out a little bit, we have quite a bit to go. The bottom of the markets happened when the 2-month flatlined and then the red or the blue line crossed back above the red line. So where we have this November of 2022, again, I was saying get into cash then, and back here, November of 21, we were getting into cash, and we started to bottom in November of 2022, and then into January or December of 2022, we started to see that turn higher, and that's one of the reasons I was starting to get bullish, along with the monthly MACD. Now, so what this means on the 2-month, I have this note to self 2-month, we have quite a bit lower to go before the bear market bottom is likely in. So we don't want to get too excited here. And But back to that, December started to bottom out here on November 22nd, and then started to head higher in that regard. So anyway, that's all I really want to cover. The MACD clearly heading deeper into the red, and generally we have 8 to 10 months of deep red before we start to recover. And a little bit longer, if you zoom out on a log chart, you usually see that play out. So, the momentum of this battleship has more. Look how long we stayed above that in the green. It was quite a lengthy bull run. So the fact that we're only 4 bars in on the monthly, probably going to continue lower. So that's all I really wanted to cover on that, and why it still makes sense to remain cautious. And so let's see, 5-day Gaussian channel, all-time high, USDT. Let me talk about this, and then we'll go to the daily charts, and we'll do some news. But this has been playing out fairly accurately. You guys can go to TradingView and see I've been posting this since last year. Again, borrowed the blue lines metric and fractal pattern from the last cycle. And when prices go down and touch this lower support trend line for 2018, when it's at the bottom, that means it is at a support level for Tether and stable coins, whereas Bitcoin and market cap are running to the higher. The yellow line is the median, so they work inversely. So when this stablecoin's coming down, markets are hitting peaks back here in April, May, going into the crash of 2021. Money flowed back into stablecoins. This is the chart of Tether dominance. And as money flowed back out of Tether into crypto, we saw the peak in November of 2021. So similarly here, we saw a high in Jan of 2025. And then the ultimate peak this cycle in October of 2025, again on this trend line. I was originally thinking it would be that, then this, and then hoping it was this. This has now been invalidated as we started to push up above this range and to break through this sales resistance on Tether dominance, turning this into support. So we are firmly in crypto crash zone and actually toying with an up into bear market zone. It is what it is. It's not good news. It's not bad news. It's just, it's not a good thing. It's not a bad thing. It's just a thing. We now have a roadmap so that when we start breaking below this trend line and coming back down in this area, that's when we're going to start seeing the bullishness return and recover. So I know that's review, but it's good to see that more than one time. And let's see, I need to load up the daily chart that we normally look at. If there's any questions, let me know. Let me pull up the chat. I don't see anything, so we'll keep going. All right, so here we go. And monthly tracker about all studies. And let me find that. If you guys don't know, you can have multiple chart layouts and save them. CM Pro Layout Daily. I will right click and open that tab. While that's loading, though, I will jump over to the 4-hour IBIT. You guys know we've been talking about this, and the IBIT unfilled gaps act as magnets to price, just like the CME gaps. You can Google that stuff and learn more about it. Why that happens doesn't really matter. I have my theories, and in the end, who cares? But what we did just do is we filled on a gap from back here in November of 2024. That's a year and a half, you guys. And I had drawn this line back here, wondering, would we come back and fill it? Because remember, we were hitting new all-time highs, and I had this circle here saying, hey, this is an unfilled gap, and suggested we would fill that in the bear market. Well, we've now done that. All of these other gaps filled. This one here pushed up, came down, filled that gap. All of these other circles have filled all the way up through here, all the way down through here, except for these three, so the downside. So the good news is ultimately we will push back up into this range and these ranges. But the gap that filled here filled with a new gap. So I was speculating that we would see prices push up here, and that would coincide with about $80,000 Bitcoin, and it hasn't done that yet. So, and it doesn't have to do it anytime soon. Remember, a year and a half. So what we are looking for here is potentially this to come down in these ranges into the 30s. And I will put an alert on that, because these are going to be, this is where the buyers are, you guys. And to be holding on now and trying to catch every dip, I don't believe in buy the dip. I believe buy the capitulation sell-off. Buying the dip, too dangerous. And we have, we know when we're below the 21 and the 50-day EMAs, we are underwater. We're drowning. Right now we're deeply drowning. So anyway, I'll be watching for that any kind of bounce. Right now it does look like it's rolling over. and that's on the 4 hour. I bet we could, sorry, the daily. We had been tracking the 4 hours. Let me see if there's any other, yeah, closer ones. Yeah, that's interesting. On the 4 hour, we did not get a gap here for some reason. And that what does show on the daily. On the 4 hour, we do have these upper higher levels still, but seeing the 4 hour probably rolling down in that 32 to 30 range. Okay, so that being said, let's jump over to finally the daily chart. Where is it? It's going to be this one, not that one. Now hold on a minute. I know, here it is. Yeah, okay, so Pirate Chain. Pirate Chain, you know, that thing, I just got too busy. I should have sold it at hindsight, and we were waiting for it to get up in this range, but it clearly did get up into the sell block. So the thing with Pirate Chain, you know, I would just keep, this is one to buy in green, sell in red. Their technology is good. I think they're going to be around. They do well in every bull run. And, you know, had we caught it early, this is one of those, I'm kicking myself because I was asking Mike, I'm like, hey, Mike, that was back in here. I'm like, hey, Mike, what do you think of Pirate Chain here? And he said, well, there's really low volume. It probably is dead. And I was looking to buy it, and then I wish I had, because then the volume really kicked up again, and it went up 6x. You know, so almost 7x, and that would have been great. We had a couple opportunities to get into Pirate Chain, had a number of pullbacks. So that's how I would look at this. I'm going to hold mine right now. I've got $1,000 of it. I'm just going to hold Pirate Chain. These are moon or bust coins. And my alert just went off this morning on the treadmill, so I thought I'd just mention it. But if it does go back to the trend channel, it's a 3 or 4x. Long term could do quite a bit better. These are the coins I have on MEXC. I'm just holding. And actually, you know what? I think I did sell Pirate Chain and I bought Canton Coin. And so let me see. I'm in the wrong list here. Let's take a look at total market cap. Let's kind of take a walk down all of these. Yeah, that's the other thing, you guys. I mean, there's nothing bullish about this chart. This is why I was suggesting getting out last night. The zigzag to the bottom, we didn't get the push up here. We're just heading lower. We have thick sell pressure right in here, breaking below the sell block. This to me says we're going down in this range. And I had drawn it back up here, and that is what's playing out. So far we are down 20% from there, but we could certainly do another 20%. Okay. That's why I was saying, as painful as it was, and again, I'll just tell you, the way to get out of positions is sell half, reevaluate, look at it again. The hardest for me was Horizon because I had a big position in it. And I sold half, and then I sold my other coins, and then I just looked at it and I'm like, I don't see this going higher in the near term, and I just sold it all. Which was easier than selling it all at once and looking at that loss. But the plan is buy it back lower when the money, we'll make our money back sooner if we can catch these buy zones. And so let's go through it all. But total market cap, you know, and I was saying, you know, the really important level was that 3 trillion. That was the market cycle high last cycle, right? And so until and unless we're below that, you know, until and unless we're back above that, we have trouble. And the other level, very important level, is 2 trillion, which we touched on back here a week or so ago. But if we drop down below it, we're going to see 2 trillion as resistance. We've seen that before. And then we're going to see 3 trillion as resistance, and all the way up to 4 trillion, which was pretty much the high of 2025. It did a little Wyckoff throw over, and this up thrust after distribution here, and so yeah, it's going to be a little while, and the bounce did not happen here. So you might be saying, no kidding, I am just reporting the obvious here, Captain Obvious, but it is disappointing. It is, but it also is not the time to be running back in. And just going through, DeFi looks like it could have, it's got some buyer support down in this range, but still, we don't want to be trying to catch a falling knife. And let's see. So interestingly, we still have that CME gap here to fill to the upside.